What's up, guys? Just doing a quick review on the trade that I took this morning. It is the 10th of March. So it's the first day of the trading week. I was doing a lot of study over the weekend. Wanted to test out some of the new things that I learned. And this is an audio recording over my live trade execution. Just because it was super early in the morning, I didn't really feel like talking. But that big red space that you see there, that's the opening range gap. So I was seeing if there's a setup to trade to the midpoint of that, and I wasn't really seeing anything telling me that price was going to go higher. That orange level that you see there, that is a hourly fair value gap. Can't remember right now if it was I believe it was a sell side imbalance, buy side inefficiency, or a SIBI, meaning it's going to send price down. You can see in the 15-minute chart how it kind of reacts off that, sends price lower, running into the opening range. Opening bell, which is at 9:30. I was even in front of the charts at 9:30. I was barely rolling out of bed at that time. Because my real, where I'm hunting for a setup, or where I'm hunting for liquidity to where I'm hunting for price to take out liquidity is at 950 to 1010. That's the morning macro that I want to get really good at trading at, because that's kind of the only macro where I can really be in front of the charts the whole entire time. After that, I have to go to work, because I'm in Cali, so we're on West Coast, which is actually pretty fortunate because I can see the whole opening, the whole morning session pretty much. Well, the chunky portion of the morning session. That's where I'm gonna have to, or that's where I want to get a lot of my setups at, just because I'm afforded, all my screen space. I don't have to be on my phone. I'm just gonna get a lot less detail trading after the morning session, at least while I'm at work. It could be a lot different going into deployment. I might have, maybe the whole entire nighttime, when I'm going to sleep and I don't have work, maybe that's the morning session, and I could probably tune into that. I don't really know the time difference yet. I'm gonna have to figure it out when I get over there. But right now on the screen you only see the 1 minute and the 15-minute, but in my room I have a screen to the right of me that's showing me the 4-hour and the 1 hour chart. And on the 4-hour chart, I already determined that it was a bearish bias, because it's been bearish for the past few days now, but then again it's showing signatures of delivering a price to sell side. Now, the market has been really crazy with the tariffs going on and everything. It hasn't really been an easy market to navigate. So, you just gotta be patient and be disciplined, and just wait for your setup. See that line that I drew on that wick right there? You can see price hammering it with wicks, indicating balance price, and price usually runs away from balance price. And that green line there is where liquidity is at. So price is gonna wanna move into that to take that liquidity out. So in the morning, everyone, so as soon as the market opens, a lot of retail traders, see there I'm using my Fibonacci. It's a measuring tool on the charts, and pretty much that's a sell side imbalance, buy side inefficiency, so it's going to send price lower. So I want to see if price can get below the halfway point. I don't know why I'm zooming out so far on the 1 minute, but I'm looking really close to see if price can get under that first presented fair value gap there, and then I want to see if it taps the lower quadrants of it. That's pretty much what I'm looking for. So you see how the bodies are like kind of got rejected from going into the opening range. For me, that shows that price is really weak. Like, it doesn't have enough strength to really get back into the opening range gap. So that is indicative of price going to the downside. Laptop's so loud. But here I see price fall under, and it's just about 950 at this time. I did pull the trigger a little early. I should have waited, and but that's something that, like, if you start to trade, you're gonna battle with like all the time, is like being scared of missing out. So I put my stop loss there because on the 15 minute it forms a I can't really see it from the screen, but it forms an order block. So you want to put your stop there. So right here we have kind of something close to a 1-to-1 risk to reward ratio. My target is the highlighted green line below my take profit, but my first easier low-hanging fruit was the liquidity just resting right above the whole entire target. Now that's just what you have to do when you start trading off. You got to go for the low-hanging fruit. So here I'm in some drawdown. You can see I'm negative, a couple $100. So that's why you don't get into the trade prematurely. And yeah, so we allow price to color outside the lines a little bit. So if we want price to go lower, it's allowed to color outside the lines a little bit, but we don't want to see any huge retracement back up to the buy side at this point. We like to see it stay like within the boundaries as much as possible. So it's trading into that inefficiency right above the fair value gap there. The inefficiency being those three white candles going downwards. There's a gap in between there, a small one. That's what price is trading to, trying to fill it. So that would have been a pretty good spot to be short at. I would have gotten price I would have bought in at a more premium price, so that when it sold off, I would have made more profit. But that's why I'm saying my entry was a little premature, because I had a premature entry. I experienced more drawdown, and that's just how it is. So again, the bodies, see how the bodies reject the red zone there, the red opening range gap. That's kind of what tipped its hand for me, at least. Even experiencing all this drawdown, I was still pretty confident that price was going to deliver lower prices because of the liquidity resting below price right now. Then here we get a lot of velocity downwards, which is what we want to see, and we want to see price get away from that area that it was kind of in a holding pattern. So that white bar was our displacement, and yeah, we just hit our take profit, and then it ends up hitting our original liquidity target. But just starting off, You want to get the low, easy hanging fruit, and then kind of just watch the rest of the trade pan out. And it kind of fell out of bed like the whole day. It just kept dropping, but pretty good read. And yeah, I just thought I'd share that real quick. I don't know if you'll be able to see it take out the rest of the liquidity, but it does for sure. I don't know if it does it right now, but the video is about to end in like 1 minute. Yeah, that was a pretty chill trade. I felt like it was kind of a little bit easy, not easy, but you know, I had a good handle on the price right there. Yeah, come back and do the same thing again tomorrow.